Have you experienced this? Whenever you short the market, it always almost right at the bottom, and right after you short the market, it seems like it always rebound immediately. And despite that, your market direction bias is right or correct, eventually you would have missed out to participate this downtrend because most of the time you have already got stock out. That's why you couldn't participate the downtrend. So in this video, I'm going to share with you how to actually profit from selling the rally in a downtrend, and also some of the things that you need to watch out for, especially when day trading the S&P 500 E-mini futures. Hi, my name is Ming Jong, and welcome to another episode of the market analysis for the S&P 500 E-mini futures for the session of 11th of December. In this video, I'm going to share with you the market recap from yesterday's session and also a trade review in the 3 minutes time frame, where I will walk you through, in this case, how to actually profit from selling the rally in a downtrend, and also things to watch out for. And going forward, I will also share my trading plan for the session later, together with all the key levels that I'm watching. Alright, so let's just get started now. So as usual, let me just get down to the daily time frame, and let's just start from there. Alright, so that's the daily chart for the S&P 500 E-mini futures. So yesterday and also on Wednesday as well, we have witnessed some of the important changes. So first thing, these two volume are relatively high. So we have increasing of the volume, increasing of the supply, and this is a change of behavior bar. And we have seen this kind of the volatility pick up in the market. And yesterday's session, we have seen some of the buying happen right at the bottom there, so that actually support the market from breaking down further. However, it doesn't seem to have followed through right now, which I'm going to elaborate a bit more in the later part of the video for the current market condition. But first of all, let me just get down to the hourly time frame, and let's see what can we extract from the hourly chart. So we can see that for the past two sessions right there, definitely supply has been increasing. That actually reflected in the result as well. So the session is relatively volatile with the big spread bars, bearish bar, and also we can see that there are a lot of the swings up and down right there. And the immediate support level at 3670 is kind of broken, and the market is struggled to get back up, or I should say specifically to get above about 3680, where there was a supply zone right there. You can see this is a big bearish bar with the spike of the supply. So this is the first level to watch. And subsequently, yesterday's session see this interesting bar. That's the first hour bar with a attempt to sell down, to break down further. However, we see a very quick recovery with a spike of the volume, demand come in and push the price up, but eventually there is lacking of the upside follow through. So we see that this kind of the market action, and eventually right after that, during the Globex period right now, from Asian down to the European London session, currently the market is just drifting down. And so far have a relatively bearish bias, because we have seen this kind of the volatility pick up, and together with the supply come in and also reflected in the price action. But first of all, let me get down to the 3 minutes time frame, and let's talk about the trade that happened, I think 2 days ago. So I didn't have any trade yesterday's session, but I did have a trade 2 days ago. I think that's on Wednesday, right at the US opening session. So before I just dive into the setup, so I'm going to show you how to actually participate a downtrend by just selling the rally, so that you won't caught up like always sell at the bottom, and right after you sold, then you always got a rebound and got stop out, things like that happen. So first of all, let me give you a bit of the context. So in trading, context is very, very important. So this is the Globex period just before the US market open. So that's about 10:30 p.m. at my time zone. So we see that prior to this US opening, we see that it's right within this trading range. So it's a shallow type of the trading range, and 3700 level is kind of a support level. So it's just did not break the support, and it's just a hover around the support level. So at that point, nothing is threatening, and I think everything seems relatively normal as per usual. But once the market open, the US market open, we see that the first few bars shows an attempt to rally up, but immediately there is a failure, no upside follow through, and subsequently this is interesting. So this downswing actually break down the immediate support level at 3700 level, although that this is not a relatively sharp reaction. We see that supply is increasing, and that actually broke below the support level. So this is the first red flag. The market is turning bearish. So in order to confirm the bearish bias, I don't really want to chase this breakout. So some of you might just want to chase this, especially you see, oh, it's a big spread bearish bar. It just looks bearish, and with the supply increasing, it certainly is bearish. But what I would like to do is to always wait for a test for the confirmation. So this is the first thing, the sign of weakness of the market. But in order to confirm that, I always want to wait for a test. So here comes the test. Right after the breakdown, most of the time there will be a test of the breakdown. So if the test is successful, what you will generally see is something like this. So you have a support right there, turning resistance there, and you can see the price shows the inability to commit above this support, now turn resistance level. So it's a pretty textbook style. This is a support, and once it's broken, it becomes a resistance level. So right after that, we have a breakdown. So this is a test, and it's just struggle to commit above. And now what I'm actually waiting for is actually a confirmation bar, which is a reversal bar right there. So right after the reversal bar, I just enter short. So if we define this as a downtrend, because previously the context is we are just right within this trading range, and here comes the downswing that broke below the support level. So this is a potential start of the downtrend. So if this is a downtrend, what we need to do is always look for opportunity to sell in the rally. So we're looking for the weak rally up. So instead of selling at an impulsive wave down, like a lot of traders tend to maybe sell right at the bottom, especially they just fear of missing out a great trade because it just looks bearish. So the emotions gets in, and they just want to get in to the trade immediately. Otherwise, they will just miss out a very nice trade, something like this. So that's always in a lot of traders' mind, fear of missing out of a good trade. So they just are eager to jump in. Maybe it's jumping there, or maybe it's jumping right at the end of the downswing. So a lot of the time, when a downswing finish or just temporarily done, there comes a test. So depending on where you put your stop, most of the time or some of the time, the trader's stop will get hunt down. So they will get stopped out, and they just fail to be able to participate in this type of the downtrend. So what I would like to do is to always wait for a test. And how do we define a test or a successful test to be exact? So we know that this is a breakdown, this is a downswing breakdown, and if we assume that this is the start of the downtrend, then the test shouldn't be too fierce and really too much up, like to go all the way back up to the top. So instead, it should just respect the previous support, now turn resistance level, and eventually to have a continuation to the downside, which is also reflected in the reversal bar as well. So it's always important to let the market show its action. So in this case, this is a downtrend, the bias is to the downside, and in order to confirm that, we wait for a test, and we can see that the test is actually respect the resistance level and did not actually come in above the resistance level, and subsequently we see that this is a reversal bar. So together with the supply level, we see that definitely this is a sign of weakness with the increasing of the supply level. And also, if we take this downswing as a look, we notice that supply is also increasing with this swing down. So everything looks relatively bearish. So that is where I enter my short trade, and I just have my limit order to get out of this trade right at this swing low right there, about 36.90, 95, somewhere around there. So I did not actually ride the trend all the way down. So this is a very profitable move, but because of the time zone constraint, I just would like to get out of the trade as soon as possible. So in this case, I think I only have probably around reward to risk ratio about 1.2. It's not huge, but still is a profitable trade. And most importantly, you can see that I think right after that, even that I didn't use if I did not use the limit order, I think I definitely will just close out right after the close of this bearish bar. Why? Because there is a spike of the volume right there. So the spike of the volume, a lot of the time, that also consists of increase of both supply and demand. So in this case, we can see that here's the demand, and subsequently we see that it actually stopped this downswing and forming a trading range. And eventually, there is quite a few chances to scale in if you trade to the downside. So this is uptrust. Subsequently, once after the uptrust happened, we have seen another breakdown. So this is a last point of the supply, and followed by a breaking down, rally up, and then continuation to the downside. So definitely quite a few spots to enter short trade. So this is a first spot which I enter. Subsequently, I think potentially you can just wait for this kind of the uptrust, or otherwise, if you want to trade this kind of the breakout, maybe if you put your stop right there or even above, then you will need to wait for this holding period, holding duration of probably about an hour, and subsequently you still be able to enter once after the trend get broken down and also rally. So quite a few nice short entry to scale all the way down. And also in my previous video, I talked about once the support level at about 3700 get broken, then most likely that we will just revisit the trading range low. So I think this is somewhere around the trading range low, which is shown up right there. So you can see that this is somewhere around 3670 or 3665. So that's pretty much the swing low right there, and you just revisit this trading range. So here we go. So that is the trend, and also revisit the swing low right there. Testing. Okay, so this is the trade that I had. Let me just quickly get to the hourly time frame, and let's just talk about the current market condition. So right now, I think we have a change in the market condition. Why is that? Previously, we can definitely see that the market volatility is just relatively normal, relatively low, I would say, because you can just see it in the price structure right there. Relatively small spread. The swing is not quite wild, and most importantly, you can see that this volume level is generally low. So these 2 days we have seen the pickup in the volume, the supply level. Supplies hit the market and that's reflected down. So that's the greatest downswing that we have seen out from, I think, the previous downswing, whether you compare this. So definitely this is a greatest downswing. And subsequently there is a attempt to rally up, and it shows a rally is weak. So this is attempt to rally. So it just failed to commit above the 3680 or 85, which is this supply zone there. So I would say that the rally is weak, and it's likely that for the market to continue to go down to test the next support level, which I believe that should be somewhere around 3630. So that is the next support level. All right, so right after that, that should be just to need to see how the market react from, first of all, there is one swing low right there, and also the support level at 3630. Okay, so for my plan for the session later, I'm going to just wait for the market to show its traction and to trade accordingly right at the key levels. So the important levels that I'm watching is somewhere around 3680. That's for the immediate resistance level, and also for the support level, that will be at the 3650. That will be the immediate support level. So that will be the swing low, and also I think it's likely to test 3630. That is the next support level. So we just need to wait for the market to show its actions, because right now I think that apart from the support level at 3630, if this also failed, then I think definitely it will just go back to this 3590. So that is the next support level. So far the market has already showed that there is a supply enter the market. So let's see if there is some kind of the support form in this zone from 3630 to 3640. So we can see that yesterday almost touched 3640 and have a quick rebound. So let's see if how it will react with the 3630 to 3640 level. This is the end of the video. Hope you enjoyed it. If you'd like to learn more on how to increase your winning rate, definitely check out the video that showed up on the screen right now, and do remember to subscribe to my YouTube channel, and also to get my weekly stock watch list update for free. So the link is in the description below. Just join it for free. Thanks for watching. I will talk to you soon.